Asian stocks continue to climb as traders in the region react to the U.S.-Iran two-week ceasefire announcement. The Nikkei pushing higher nearly 5%. South Korea's Kospi more than 5% in the green as well. We are also seeing crude prices plunge, with both Brent and WTI staying below $100 a barrel, after Tehran said it would allow safe passage of ships through the Strait of Hormuz for 2 weeks if U.S. attacks stop. And for more, we are joined by Andrew Lipow, who's president of Lipow Oil Associates. Andrew, thanks for your time today. So oil prices plunging on the news. At one point, I think WTI was tumbling nearly 20% there, which is unusually steep. Is this based on supply expectations, you think, going forward, or really just the unwinding of that massive geopolitical risk premium that we've been seeing for weeks now?
Well, I think it's a little bit of both. I think the oil market looks at the ceasefire at least as the start of getting more oil to the marketplace. There's still a lot of questions about what the reopening of the Strait of Hormuz means, given that Iran wants technical coordination with their military at the same time that the President Trump wants a complete opening of the strait without any interference. So we're going to have to see, is Iran still going to take the posture that they're going to be collecting fees and limiting who goes through the strait, or is it really going to allow lots of those tankers that were stranded inside of the strait exit capacity?
Yeah, so the element of uncertainty is not yet gone. And so how should investors really be pricing in what could be another 2 weeks of volatility?
Well, we're certainly going to have to wait and see. Is this the start of something substantial for negotiations? Because it still seems that both sides have requests that the other side just can't accept. The U.S. wants Iran to get rid of all its nuclear material. Iran wants the U.S. to pull all its military out of the Middle East. So we're going to have to wait and see. But clearly, with WTI at around $96 a barrel, that's still way above the $67 a barrel it was prior to the conflict. And even with the reopening of the strait, it's going to take weeks, if not months, to restore some of that production that's been shut in the Middle East to the tune of about 9 million barrels a day. So there's a long road to go in order to get back to something resembling normalcy.
Yeah, I would be curious to find out how major oil producers, OPEC Plus, are likely to respond to this sudden shift in prices and the moves coming out from the Iran conflict.
Well, we saw, OPEC Plus just recently over the weekend say that they were going to increase their May production by just over 200,000 barrels a day, which really may have been a hollow promise given that the strait was closed. We know we've lost a huge amount of supply over the last 5 to 6 weeks that they may be trying to make up. We've also seen Saudi Arabia increase the official sales price of their crude to whether it's Asia or to the US or Europe to near record levels. So it by no means is crude oil really cheap right now. It's quite expensive if you want to get that physical barrel into your refinery.
Well, Andrew, any good news you think for consumers then on energy oil costs?
Well, I think there actually is good news because when we look at the gasoline futures price, it's down about 35 cents a gallon. Diesel futures prices are down over 75 cents a gallon. That will trickle through to the consumer, especially at the gas pump over the next week. For the diesel and really the jet fuel prices, that is a big relief to airlines around the world who are raising ticket prices, raising baggage fees, cutting their schedules. I'm sure they're breathing a big sigh of relief, and they hope that this ceasefire holds and continues so that crude oil prices continue to fall.
Yeah, and I just want to go back to the point about, Iran talking about the safe passage through the strait and really the resumption of transit for what is 20% of global oil supplies. Can you walk us through how that process is like and really how long does a global supply chain take to normalize?
Well, as far as the Strait of Hormuz, that's really up to the Iranians, I think, right at the moment to determine what kind of passage is going to go through. But let's just assume that passage is open. We have a number of tankers that are certainly stuck in the Middle East. They're full of crude oil. It would take them about three weeks or so, 3 to 4 weeks to get to, say, Japan, Korea, or China, far less to make their way over to India. Um, but then the question is, how quickly could Iraq and Kuwait restore their production that's been shut in? Then, of course, we need to get empty tankers back through the strait to load these cargoes. So you're really looking at 4 to 6 weeks, maybe a little bit longer to restore these supply chains, especially into Asia and India. Going to Europe, it may be about the same time frame, but the US, when they did ease the sanctions on Russian and Iranian oil, that did allow more oil to come to the market. So we're kind of attempting to bridge the gap here over the next month or so.
Yeah, the period is going to be crucial. And I just wonder if this agreement is not finalized by the end of this 2-week window, can we expect oil prices to possibly spring back above that wartime peak pricing?
Well, I think that's the greatest risk and fear in the market, that if this ceasefire falls apart because the two sides are really intractably apart and the missiles start flying again, I think my biggest worry is this gives Iran a couple of weeks to reset and actually maybe rearm to a certain extent, and then you worry about their retaliation for any missile attacks that come from the US or Israel, especially on the neighbors there in the Middle East, because if the Iranians feel they're going back to the Stone Age, they may take the rest of the Middle East down with them.
Andrew, really appreciate you breaking this down for us today. Andrew Lipow there, he's president of Lipow Oil Associates.